Yeah, I'm losing my edge.
Dive into stocks more often. We don't usually talk about single stocks, Pete, but this is kind of an outlier event here.
Yeah.
Amazon up, I think it closed up almost 8% yesterday. And we alluded to it a little bit.
Two dudes like it.
Yeah, because a couple of people over at Goldman, and this is what's really funny to me. And this is actually a great example in what we are talking about when we talk about price extremes and a move that's overdone. Because Amazon has earnings, I believe, on July 30th. Yesterday, the stock is up 8%, which is a crazy move outside of earnings. In earnings, a stock like Amazon can move. It can move not at all. It could move 10%. It could move 20%. Even around earnings. Yesterday, not earnings day, but some people at Goldman Sachs said that they're adjusting their earnings expectations up a ton higher, and maybe they're right to do so. But what I have a feeling we're going to see is an 8% rally yesterday. And then when July 30th rolls around, another 5 to 8 or 10% in Amazon. And that's when you kind of jump in there and you say, okay, this is overdone. And we've talked about in the stock market before, the last couple of years before the world has been set on fire in the last few months. We were, what we thought was the world on fire was trade deals and stuff like that, stuff that seems kind of meaningless now. But and you remember that, Peter, was like every time Trump or whoever else was like, oh man, these trade deals, they're not going to happen, the stock market would sell off, 1% or 2%. And every time they were like, oh, these trade deals are going to go through, it'd be a 3, 4, 5% rally. And it got to the point where it's like, all right, we've rallied 10 times on these trade deals. At what point is it overdone? And it, of course, inevitably it does become overdone and the markets move back and forth. Today, I wanted to talk about this most recent example in Amazon and how we can treat it versus everybody else. Because this is a scenario where you saw an 8% day in Amazon yesterday, and Goldman Sachs, Pete, they weren't talking about every other stock in the stock market. Yes, Apple was up. Yes, Microsoft was up. And we'll see the varying degrees of their appreciation this year. But no one has been up yesterday like Amazon was, this year like Amazon has been, the last 4 years like Amazon has been. I mean, Pete, this is a stock that has gone from a few $100s. And I remember the first time it broke 1,000, we were like, wow, this is a big move. How are we going to, this is a big notional stock. We usually don't have to worry about big notionals in stock products. But Pete, it's gone from $1,000 up to 2,000 to north of 3,000 with really no problem at all. And rarely do we talk about, oh, the notional is such a big deal in here. But this is one that if you're trying to trade options on this, you're trying to trade outright shares. Of course, you can someplace get fractional shares, but this is just a difficult beast here. And it's prompting our conversation for Amazon versus everybody else today.
It is. And it's such an interesting, and you're right. Last time we had a tech run up, and at some point they all call it a bubble. It's just correction. It was on this pyramid of fewer and fewer names. We're seeing that still play through. It doesn't tell me that, oh, well, this is it. There's 3 names driving this up move. But these are truly exceptional moves, and it's interesting to see how news is received. And it doesn't change my opinion, but you're right. Somebody could come out and say, hey, I saw 3 extra boxes on my door and Amazon's going to put another % on. It seems like no matter what anybody has anything to say, I'm sure if somebody came out and said earnings are not going to be bad, we're in that mode now where the stock rallies. There is no bad news. Bad news is good news. Good news is great news. And you know what? This will take, I think, even in this case, and you've done some great research about equity indexes when they post contract highs. Very rarely do they roll right back over.
Yes.
This is going to be one that's going to have to spend some time up here and just get people complacent or exhausted trying to be short it. And then you'll see the capitulation. But
I'm very glad.
I don't know if that comes from 3,500, Frankie, or from 4,000.
Exactly. And I'm very glad that you bring that up, because the second part of this is the timing angle on this. Because whether it's Tesla or Amazon, I mean, you were wrong getting short this stock at almost every level, except for, a couple of times it peaked above 1,000 and came back. A couple of times it peaked above 2,000 here. Actually, a lot of times it tried to get above 2,000 and came back. Haven't seen that at the $3,000 level quite yet. And it is this matter of, maybe Amazon should be worth $3,000. Maybe it should be worth $4,000 like you're speaking to. But what we're trying to take advantage of as active traders is potential mispricing in these extremes. It's this idea of it gets above 3,000 for the first time ever, and it's bouncing around like mad. Yesterday it was 8% higher. Today it's 2 or 3% lower. And amid that, taking advantage of those big swings and, like I'm saying, potential mispricings. I mean, I remember speaking to a friend months ago at a bar when bars were still a thing, and he was talking about, Tesla, Tesla above 400 isn't enough. Tesla's going to blast off. Right. And I was just like, and I wasn't doing the whole, I don't really like the whole contrarian thing where it's like, oh no, it has to be lower. It has to do this. It's like, I was just like, oh yeah, maybe. I mean, but this is kind of a wild ride here in Tesla. And hey, man, he was right. Tesla got as high as, what was it, 1,600, 1,700, whatever. Right. But then amid all of that run up, it does give a bunch of back and forth. And you'll see in the next couple of weeks, Amazon and Tesla both, we're zeroing in on Amazon. Both of those will see a ton of back and forth. Maybe Amazon gets to $4,000, but if it does, I guarantee it's going to have multiple days where it's off a couple $100. And timing is essential with this. And this is why we've made such a point in recent years to not sell, just blindly sell every up move in a stock market or a single stock, because that doesn't really work out. It hasn't worked out this year aside from this first little move, but man, Amazon bounced back harder than anyone, and maybe for good reason. But, this is what we're looking at. And with Amazon being such a big, unwieldy beast of a stock, it makes me not really want to deal with it, makes me not want to deal with its options. Right. And what's nice is we can almost look to this Nasdaq as a proxy for Amazon, which is a weird scenario. But when you look at the fact that the Nasdaq is 10% Amazon, this year's move alone has accounted for 8% higher in the index, which doesn't seem like a lot, but that is huge. A single stock dragging an index 8% higher, and it's only midway through the year, is huge. Right. And that's because Amazon's up 70% year to date. And it's accounted for this huge move. And then a smaller but still big move in S&Ps, and then an even smaller chunk in small stocks 75. And it creates a scenario where this Nasdaq piece might be the best proxy for you look at these, it's like, well, I want to get straight to Nasdaq, and I don't want these other chumps diluting my trade. Well, the other chumps here being 12% Microsoft, 12% Apple, and then another 7 or 8% Google. Trust me, they're all up and they're doing really well. And that leads us to this. I think that this is a better proxy here. What do you think?
I agree. I think anytime, this is the challenge with baskets. They lose their relevancy over time. Just the nature of construction. And this becomes a challenging play to take a look at when you have so few components driving it. I don't know what, it's not really an index trade to me. Part of the index trade is that it's representative. Now, we know that adding components allegedly slows down volatility a little bit. I think Nasdaq is a bit of an outlier here, but when you have one or two names, or in this case, 4 driving so much of that index, it really loses its spot as, comparing it to everything else. And when I say everything else, whether that be Dow or Russell or S&Ps, it loses its relevance as this push and pull. It is just its own very pyramidic, I don't even know how, pyramidical, whatever you would call it, driven set of components that really challenge how you engage with them. So I think something that has a more balanced approach to these outliers is actually more holistic exposure to the entire marketplace.
Yeah, because we've been this has been a theme in recent weeks as asset classes in general have kind of been trending in certain directions in recent weeks. There's been some good back and forth in some of them, but metals are higher, the dollar is lower, stocks are higher over the last couple of weeks. And so we've looked at a lot of these relationship trades, or like you coined the term here, Pete, taking stuff out of these small exchange indices that are so diverse and broad that allow you to kind of say, okay, well, I can take this Amazon piece out of it. What's difficult is it's a $3,000 stock.
Yeah.
You're not going to get any favors in terms of buying power reduction on trading the shares.
You're going to get hit harder.
Oh my gosh, it's going to be real hard to from a notional standpoint,
right,
because it's $3,000 and the small stock 75 index itself, a futures product, is only about $5,000. And then also the buying power on any options in Amazon or outright shares in Amazon really going to kill you. And it's nice that it's dovetailed with the Nasdaq for all intents and purposes, in my opinion, is essentially these things. It's almost gotten to the point where it's almost 50% these stocks. And so at this point, you'd like to think of the Nasdaq 100 being 100 stocks to trade off of the 75 S&P 500, the small stock 75 stocks. But for all intents and purposes, this is selling Nasdaq and buying small stock 75 is taking these four stocks out of the small stock 75 index, which, going back to these numbers, small stock 75 index has seen a piece of this Amazon move, a piece of that Apple move, and a piece of Microsoft and Google, but all those pieces are around 1% to 2%.
Right.
And so it's not seeing, that's where the value in buying that basket is against taking out those four outperformers when you see what it's done to the Nasdaq relative to the small stock 75. Now, Pete, how can we do that? The most traditional way is a way that we've looked at a few different times, which is 4 small stock 75 contracts against 1 micro Nasdaq. But this trade is already getting kind of unwieldy when you think about the micro Nasdaq, Pete, being above $20,000 in notional value and seeing big moves.
I agree with you. But you know what? You have no other choices. You do, but they're very expensive choices to employ. Sure, the $400 I'm out per micro Nasdaq. Let me see if that's about $500. That's big in the world of small products, but just think about that $5,000 if you were using what they call a mini Nasdaq, not a micro Nasdaq. So, outlier moves, absolutely. The scope of these moves, very dramatic, but, taming the beast in some fashion, both from a capital standpoint and from a movement standpoint, incredibly important. And I really look at these trades that we've constructed with $800 in buying power as trades I can sit through in terms of comfort. And that's really an important component here.
And you're getting the extreme here. And this is a pairs trade that will still move a fraction, on most days moves a fraction of the NASDAQ alone for sure, because you're getting that hedge against it. And you've got the extreme here with the small stock 75 at a real historic value to the NASDAQ down here. So if you can go with this trade, I think it's a trade that you and I have looked at employing a lot, and it is very straightforward and pretty simple to construct. But Pete, Daria, a good friend of ours, brought this up when we were looking at short SPRE and short puts in silver. And she was like, oh, could you do the short puts in SLV? And it's like, oh, you're going to lose some of the efficiency. But yeah, you can. And I wanted to look at the fact that you can make this trade even smaller. You're going from this year, the range is about $6,000 in the 4 contracts of SM75 and 1 micro Nasdaq. When you look at 1 small stock 75, Pete, and what would essentially be half of a micro Nasdaq or a 40th of a big Nasdaq, it would actually equate to about 18 deltas in the QQQ options world, which actually isn't that tough of a pill to swallow. Now, with naked options in QQQ, they're probably pretty expensive right now to put on, to just go in there and sell the 18 delta call. But what
this is why we use call spreads. Sure.
Exactly. What you could pretty easily get done here, Pete, is the short 30 delta call, the long 10 delta call in QQQ against one contract of small stock 75. You're going to reduce this trade by fourfold here, from something that moved $6,000 to something that's moved about $1,600 this year. Essentially kind of a covered call, whereby you're getting long this purple line here and you're selling calls in this yellow line via the QQQ. And I bring that QQQ up because, oops, sorry, a little too far, because those options a lot more liquid, Pete, than the Nasdaq futures options. So if you want to do 3 deltas in Nasdaq futures options call spreads, go for it. But I don't mind just going in there, selling the 28 delta call, buying that 10 delta call, or something around there, and buying the one small stock 75 against it. It's going to get really the smallest equity pairs trade you possibly can, and it will get you that Amazon versus everybody else.